Hello guys, welcome to the Train Parrot. I'm gonna do the general markets update analysis. This is the way we closed the market yesterday. We got a mixed bag in the market, and at the same time we have gold potentially putting a double top at around $4,400. That coincidentally happening after liquidating the last bucket of liquidity, large, that was on the upside. It was a severe correction, the largest daily drawdown of since 2013 pretty much. Today I'm also gonna give a special cover. I'm gonna cover dollar as well because it's on the branch to break above $99-$100 resistance. And of course we cover all the stocks, major players, all the news and everything that is happening within the macro that you must watch. Even if you're trading crypto, get out of the bubble and understand a little bit better the market. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes on a general markets video? Maybe I'm gonna have to wait a little bit longer, but I'm sure you can make the difference if you just go there and hit the like. Let's do it. If you want to trade general markets, VT Markets is an amazing broker international that gives you 100% welcome bonus if you use the link in the description. The beauty is that if you are already investor in crypto, you can just transfer USDT into this broker, something you cannot do on interactive brokers, for example, and get started with your trading in general assets as well. Guess what we're gonna be doing during the bear market in crypto? Well, we're gonna be using this. We got coming in later this week the core inflation rate, inflation, CPI, and all of that. There has been some developments around the expectations of the Fed decision in October. Somehow the 25 basis points decreased 1%. We got now a 2% not change and a 2% equal to the not change 50 basis points. And that is the biggest change at the moment because we have in here 3.3 no change. That's an increase as well on the Federal Reserve CME Group Fed Watch tool. So interesting that this is coming out of the 100% now into 96. We need to look into what pieces at the moment are moving to understand if there's something that we need to front run. In 2 more days, we got scheduled the US CPI report. It's been held because of the shutdown of the government and the impact on risk on assets like BTC is a 7 out of 10 bullish. Markets are awaiting inflation data before the Fed meets in October 29th for the FOMC. Uncertainty pressures risk assets. Still, that 96% of expectations of 25 basis points is an 8 out of 10 bullish. Near certain easing boost liquidity outlook. Labor resilience tempers recession fears, reduces the urgency for aggressive Fed cuts. Supposedly, it is the US jobless claims that is pushing that from being 100% now into just being 96 point something. Jobless claims fell to 215K the week ended in October 11th. And the US 10-year yield declined again, now this time to 398. That's a 7 out of 10. Lower real yield reduce opportunity cost of holding non-yielding BTC bullish signal. Somehow the oil has rebounded to 58.21 after near 5-month lows. So we got a bunch of elements that are currently changing and we need to understand the full picture. We have some signals of rejection at 4.4K in gold. We have the dollar that we've been anticipating a reversal from the multi-year support into over $100. We still don't do that, but RSI is indicating that that's where we are heading. We got the oil potentially finding a bottom, so we see that the current trend is trying to find now a new direction. US-China trade war is a 4 out of 10. The oil as well is a 5. China expands rare earth export curves. The tariffs threatening of 145%. That increases the uncertainty. So this combined with the rest is pretty much squashing really what is the direction we are gonna go next. The S&P opened flat and the Nasdaq minus 0.2% on the chart yesterday. Mixed signals as earnings offset shutdown worries. BTC correlation with tech remains fragile because somehow there has been a run in general markets and we were saying BTC is not following what that's happening, and we gave 2 outcomes. Sometimes BTC precedes as it's acting as a leading indicator for the general markets to then follow up with some correction, or sometimes Bitcoin is just waiting lagging behind to follow through with what the general market is doing. And we need to really understand what's going to be the case. Is the general market going to put a local top and then drag together with Bitcoin down? Or are they just going to catch up with each other and continue to the upside? This is how it looks, the chart of gold. Gold plunges to its biggest loss in more than 12 years in a single day. Quantum stocks, if you are not aware, refer to shares of publicly traded companies involved in quantum technology. If you don't know what is quantum technology, that's about to hit the world, so you better are prepared for this. Quantum computing, quantum communications, and quantum security. All of them are the next thing that could put a threat to all the world of cryptography. Cryptography spans for thousands of years when some philosophers and mathematicians were coming up with ways of encrypting messages. They needed something to send a message to someone else, and that came all the way into World War I and II when they were encrypting the messages of the submarines. Mathematicians improved vastly that, and now we have all the security of computers based on cryptography. But quantum computer is something that can completely break that, because instead of relying just on single bits, ones and zeros, it can be the combination, the uncertainty that you really don't know which one it is, and thanks to that it can combine so many different scenarios at once and test different things that it can really crack all security. And we're talking about the security of all banking, we're talking about Bitcoin, your passwords, everything. And there seems to be currently a big move in the stocks related to quantum stocks. I don't know what happened, I don't know why they're falling. And yes, apparently they crashed yesterday. You got big movers, and potentially this was led by overheated valuations. Many quantum stocks have been trading at extreme price to sales ratios, much like the excesses of the dot-com bubble, maybe trying to take advantage of a potential application coming in the near future, affecting all of this that we've been talking about. Or maybe there was a shift to large cap safety. There are many reasons why this could be happening, but in my opinion, there could be an opportunity to look into some of these stocks, particularly during this crash, as long as if you understand what's going on. These are the tickers, this is the current correction, and I'm gonna have a look as soon as I have some time. We definitely have an overcrowded space in everything to do with tech at the moment. Tech funds just post a record weekly inflow of 10.4 billion. That's the largest since 2017. This follows 9.2 billion in the prior week, marking the largest two-week inflow on record. This also marks the fourth consecutive weekly inflow. As a result, 4-week moving average jumped to 5.2 billion, surpassing the previous. At that speed, we are increasing at 5.2. That is just mind-blowing. It's crazy to be riding a bubble and at the same time not being able to precisely say when it pops. Gold prices fell 6.2% to around $4,060 per ounce, marking the largest daily drop since April 2013. The decline was driven by strengthening US dollar. So by understanding what dollar could do in July, we understand what it can happen to the rest of the things. With dollar getting into 99, with this RSI saying we could possibly go into 105, you probably think, if you are not really aware of macro, that I'm wasting my time here. But with a dollar strong, that can put pressure on absolutely everything. Yes, and Bitcoin can rally with a strong dollar, but that is an exception. You should not use it as the rule. Optimism increased due to easing trade tensions between US and China, which this was posted early this morning, but we also have this post from Trump, which now I'm doubting if it's genuine or not, saying 155% increase for China. He's constantly changing his mind. I actually doubt that he's changing his mind. He's just taking the piece. You cannot change your mind every half an hour on whether you're going to agree with China and then there's going to be 150. You just post random things, and the only reason you can think of you will do something like that is either you're completely idiot, crazy, or you are manipulating the markets. I don't know which one is worst. So this came out yesterday at 10:45 p.m. and Axel is talking about that there is less worries of tariffs with China. So I'm a bit confused which one is the right one now. Also, Trump posting yesterday United States to pay off national debt using tariffs in order to pay for all those trillions. You really need to go all in with the tariffs. And by the way, that means that the people in US are actually paying for the debt, not really the other countries. nowadays because the tariffs are applied to the end consumer. Yeah, the people that are selling sell less, but they put the tariff on top and they sell it to Americans that have to buy more expensive those goods. Anyways, I hope you're not too upset to have to pay for the own $1 trillion debt, because in practice it's gonna affect us all across the world. There's no way to get out of that. The whipsaw is gonna be heard in Pluto. Serious credit cards delinquencies, unpaid balances for at least 90 days hit their highest level in 14 years. This shows you the stress that retail is in at the moment. Credit cards of end consumers being smashed like crazy, overused because of debt and all of that. And we also have the stock market concentration has reached 1800s levels. Information and tech communication stocks now reflect record 45% concentration of the total US market cap. This percentage has doubled over the last 10 years. The last time in the 50s it was energy materials, interesting, and in 1875 was transport. Well, I guess it was all about horses and horse shit at the time. Can you imagine the smell of New York during those days? Well, and London as well. Finance and real estate was the previous thing where it was pretty much 100% of all the concentration. Right, let's go into the charts. Let's do some proper TA. Let's start with the dollar. What do we have so far? We have an intra candle, again, that is beyond the neckline of 98.8, getting into 99. Not that far. It's looking strong. It's looking like a double bottom. And again, day by day, I say we want to get into $100. We want to close right here, ideally in a breakout. Use this target that comes from the bottom and get into 101.4. At that point, we are, thanks to that initial breakout, we are breaking out from a larger pattern with a neck at 100.7. That second breakout, if it plays out, can put the price into 105. 105 is a lot of pressure. Even if it's a dead cat bounce and then we end up breaking the multi-year support in here and we come back to here, going into 105 is a lot. It's more than the golden pocket for sure. Golden pocket probably is around 103. Getting into 105 means we came back into the point of control of all this trading range, and we are threatening of turning this into a liquidity hunt and going into 110 again, which is the multi-year resistance that we already played at 110 earlier. All of this, guys, like it or not, believe it or not, dollar is still very big. It's in retracement of the importance and relevance. People are jumping out of the dollar slowly, governments, but it's still a beast. And with the dollar just getting into 99, apparently we could be about to get a red engulfing candle on the weekly time frame. If we close this week below $4,000, that is a hell of a sell signal in here, bigger than this week down in this area. Potentially it could have more than just the sideways effect. It could bring the price into the 21 weekly, currently trading at 3.5, but if it meets with it, it could meet at 3.8. If it does it slow, next support is the previous resistance, which is 3.5. And on the weekly, RSI for gold, really important, guys. Now gold needs to get bought up all the way to 79.34 weekly RSI. If it cannot do that, we are confirming a liquidity hunt from the top of the range in an area of bearish divergences, descending trend line in here. The bullish setup was a retest. The most bearish was worst scenario is to close very close here, pinching all the way down, because that is a bull trap. And a bull trap, we don't know where it stops. This can drag all the longs that are trapped here and drag them until they are completely suffocated. That is what precisely I drew from the highs. Go to my general markets video when we were at 85 and I say the scenario I fear the most is to come back, put a weekly close here, retest, and go all the way to 44. So let's look at that line in the cent, 79.20. Where is it in the price? Because we need to close above that to prevent this 79.34. So unfortunately, I cannot do this calculation because what the RSI reverse is telling me is that if we close in here at 71.44, we need then to put a high at 4481 to get the RSI in the next candle to go back to 79, which is completely different to say at what closing price this intra candle in play needs to close to prevent this carnage. And so I'm going to speculate in here. I'm going to say we need to move the price, the whole move from the high, from the closing, the entry entry was 4.2 and it moved down to 4. So we have moved $230 down, and we need to move $120 up from where we are to reclaim 79. So we need to go to $4,170. That is the close I am looking to prevent the disaster for gold. Otherwise, this is a big sell signal that can fail, yeah, but it's a strong one, okay? And it's on the weekly. On the monthly, a close like this, a large week like that, we can track back in time and see if we can find another one. I don't even find any. We can find one here in the 80s that put sideways gold from the 80s and broke even in 2006, 26 years after. I'm not calling for something like that, you know, I am no clue, but I couldn't find any week like that on the monthly chart that big. VIX is holding the 21 weekly. It put a week to the upside, but if it's holding the weekly and we close like that, we're also gonna hold the neckline of 50, which we are slightly below now, and we could potentially aim for 60 and then get into the area of bigger disaster, bigger volatility incoming, affecting all assets. Nasdaq still at the highs, $25,000. S&P pre-market is looking like it's got the same price as yesterday, 671. We got some liquidity on the upside. We will look into liquidations again. The US 10-year is approaching support at 3.8%. We've been at 3.9, at 4, and if we meet with this support, we could find that at 3.9. Not saying it's gonna hold, but it's a point of interest nevertheless, and it's a breakdown on the weekly from this area. We'll keep this particular line to see if we can get a breakout eventually of the 10-year into the next resistance of 55, but too early to talk about that. Nikkei is seeing a rejection similar to the one it saw in the beginning of October, but still not achieving the full target of 53 of the double bottom that we have in here. We have achieved a lot, 49, and the target was 54, so it could rally a little bit longer, meet with the percentile there. It hasn't broken down from here. It has done multiple breakdowns, but layer 1, layer 2, 3, 4, 5, and it's holding the 5th. Typically, when you do 5 fakeouts in a row, you end up breaking down. So really, Nikkei is going against all the odds with being at this high. So very quickly, the stocks, Google hasn't changed that much. It's still the same situation as yesterday, double top with a breakdown. Apple holding support pretty nicely. Nvidia in a channel down, still not putting a new low on the RSI. It should ideally, to confirm the downtrend, to put a low relative to 59 in here, maybe complete the channel and hit the lower end and break below the 21 weekly, completing the double top in there. But we have the earnings, so that's going to affect most of the stocks. AMD around all-time highs, again insisting with the revenge rally in there, which should reject the price eventually. We have an intraday of 237 versus 238, so slightly lower. Amazon somehow preventing the neck in here breakdown of the double top, meeting with the 21 weekly. Earnings coming in next week. Tesla still battling with the double top, double high, double bearish divergences on multiple time frames. Palantir double top in a channel down, breakdown, no news. Microsoft, Meta, all broke down, all retest. MicroStrategy kind of puking in here, not puking yet, but you know, not reclaiming, neither in the price, neither in the momentum. And Robinhood battling with this channel down at the highs. Pre-market 129 versus 131 yesterday. All of them coming in with earnings and revenue either next week or the week after. So we should be expecting more volatility. This is kind of containing the pressure pan from exploding, cooling down a little bit the temperature to the downside, because we got on general markets just so many things going on. We have 7, 8, 6, 7. Those are bullish. Neutral, 5. And then we have 4, 6, 5. Not a lot of bearish things, but well, when I read it the first time, it sounded a little bit more dramatic than the first time. Anyways, I'll see you in the next one. Take care. Bye-bye. Remember to hit the like and write a comment down below. Remember,